Welcome, everyone. I am Mike Bellafiore, and we have a really interesting webinar today. The webinar is featured around an exercise that we use on our desk, which we call the daily report card. This is something that was recommended to us by Dr. Brett Steenbarger, who helps a lot of our top traders and even some of our not so top traders who will be top traders one of these days. And so Austin and I actually online have been working collaboratively on his trading. He is a seven-figure trader, trades the Australian markets, and we've been working a little bit together in an organized way. And what we've been doing is Austin's been sharing his daily report card with me, and I've been providing feedback. And so this is definitely unusual for all of you because you're getting to see the work of a very high-level trader. Whatever people think out there, somebody who makes seven figures is a really terrific trader. And now we're gonna give Austin some ideas and go over some things about how he can be even better. But look, you're a really terrific trader if you're a seven-figure trader, and if you're an Australian trader who does not have the opportunity that we do in the States, you might even be better than really terrific. So, but I'll let the Aussie traders comment on that. All right, so I do want to sort of set the context for what the daily report card is. I do want to challenge all of you that are watching and or listening to this webinar. What if at the end of each trading session that you posted a trading report card and not just your trading P&L? What if we were to really start seeing that across the trading community? And what if this became prominent as a best practice for the online trading community? The report card would focus on one monthly goal that you have for your trading, perhaps sizing, consistency, expanding your playbook. We call it being broader. Limiting your losses. The report card would be your daily progress report card on that goal. You'd give yourself a grade for that trading session on that one goal. So I just want to go over this and clarify it. The daily report card is not your journal. So we use something called the SMBU Performance Center. You can use very similar tools in TraderView. And so it's not a journal, okay? That is not the purpose of the daily report card. This is separate and on top of a journal. It is more specific and is more constructive. You are picking one goal that you want to improve in your trading. So what's that one goal that you want to improve on your trading to get better? You want to work on that goal intensively. You want to work on that one goal intensively, and that is key. You want to develop solutions to achieve this one goal. So you don't want to just sit there beating yourself up in your daily report card. What can you do better going forward so you don't make the same mistakes? And you want to complete a report card at the end of each trading session on the progress that you've made on that one goal. And so we're going to bring in Trader Austin here, and we're going to ask him to give us some context about himself and his trading. And so, Austin, why don't you just sort of give us a little bit of a backstory as to how do we get started working on the daily report card?
Yeah. Before I do that, I mean, what I really wanted to say first, it was also to thank you, Bella, for all the hard work that you guys do at S&B and for constantly reaching out to the trading community. I mean, the content is invaluable. So look, I thank you, and I know there's a lot of guys here in Australia who are also hugely appreciative. So once again, thank you. And I guess that's how, we started working together. I wanted to.
Well, I will say to the people that are really appreciative, some first class tickets for Merritt and I to around the time of the Australian Open, and maybe some tickets to the Australian Open. I've never been.
That can be done. That can be
Roger. Done. That'd be great.
No, we are truly. So that's, I guess, how we started working together, and that's why I reached out to you specifically. We've had a good trading year so far. Very much wanted to build on that, and I very much wanted sort of a mentor in the background to go over how I trade, to get me focused on the steps I need to take going forth to build on not just this year but going forth. So that's how we started working together.
And we've
And
met
you
before.
very
And
much
we've met before
highlighted.
in New York.
Yeah, that's right. I
In,
mean, I came to New York on holiday. I actually got engaged on that trip, and you didn't know me, and I just emailed you, and you took me out for lunch. And that's I think testament to your character. You just go and reach out to people. You actually signed a book for me, which I gave to a buddy of mine, Bryce, which was very nice of you. So yeah, we met in New York, and so we've been speaking ever since.
and Bryce is your mentor, exceptional trader as well.
Bryce has taught me
Was
a lot.
Yeah, okay.
That's for sure. I attribute a lot of any success I might have had to him for sure.
Okay.
Does he mentor me daily? No. He probably posts the close, downs the tools a little bit, but yeah, certainly throughout the day, on weekends, every living, breathing hour, we're talking trading. So.
All right, great. And so where do you trade and what do you trade?
So I'm based in Sydney. I trade equities, just cash equities, long, short, don't trade futures, don't trade ETFs. Predominantly a short-term trader. My sweet spot is probably sort of 2 to 5 days. Anything beyond that, usually invariably turn into losing trades. So I'd call myself a sort of a hybrid of an intraday sort of swing trader.
All right, great. And so I remember maybe midway through this process, we coaxed Bryce into joining these daily report cards.
Mm-hmm.
And Bryce said something interesting, which is stock selection is even more important in Australia than it might be in the States because there's just not as many stocks that are really moving. A good point by him?
Yeah, I mean, absolutely. Well, the hardest thing, and this is what I've enjoyed the most with having these report cards, is the liquidity factor. So it's all very well and good to say, I want to get bigger in my A plus trades, but the reality is there actually liquidity there for you to get big? Is there actually liquidity there for you to manage that size? So look, there's always opportunities, but I think in our market, you have to be more selective, and there probably is less opportunity that you guys have over there.
Okay, great. And would you consider yourself to be a breakout trader?
Yeah, I mean that's sort of my bread and butter. I think you could call me sort of a momentum trader for sure. Is where I'm probably at my best. But look, you have to adapt to every changing market. I mean, when I first started, we were in a pretty horrible bear market, and you could call me a bearish momentum trader. So yeah, certainly that my strongest setups are momentum trades or breakout trades, you could say.
Okay, good. And, it's interesting. I was in Chicago on Monday and part of Tuesday, and one of my former interns who has gone on to become a pretty successful trader, he trades a style that involves combing through lots of research and finding a news edge
Mm-hmm.
and then trading with that news edge. And I was talking to him recently, and he was saying, while I trade that way, the things that I learned when I was at S&B as an intern, I'm really starting to use a lot more now because the volatility has picked up. And but not only that, that my entries and how I take things off and how I add size are very much dependent upon just overall fundamentals of momentum trading, which is how we used to teach traders how to trade. We used to teach traders, and our momentum trading was on a shorter time frame than your momentum trading. When we first started S&B, we would teach people momentum trading based on intraday intraday movement. But that trade in of itself in our markets is really coming back. So we started training people how to be momentum traders, and then HFTs came into our markets, and we had to adapt. And we then shifted to only taking the best of the best momentum trades on an intraday basis, and only the best of the best types of intraday traders could really trade them. But they're starting to come back again, those momentum trades. And so I think we all sort of have different definitions of momentum trades. I
Yeah.
kind of understand what you're looking for, but I don't think the people listening do. So when you're looking for a momentum trade, what does that setup look like?
I mean, the overall the most important point is the catalyst. So, where I've probably fallen short in the past is just looking at a chart and thinking it's a breakout and confusing that with momentum. So having the right catalyst is everything. And, I kind of try to break those down into categories. It might be a news item such as an earnings report. It might be a detailed broker report. It might be, whatever the specifics are. It might be just a technical setup. So that is the most important sort of overarching theme. And the second thing I'm always looking at when I talk about momentum setup is the actual chart itself. I'm already want to see it, above a key technical level on, say, a daily chart. I already want to see it not overextended, but already in that solid uptrend. So not trying to predict where it's going to break, but it's already gone. And the third thing is this concept that you always talk about, which I call price action, but you call the tape. So drilling down onto, a very short time frame, looking at the book and seeing that price action, seeing that tape, seeing, if a momentum trade, I want to see these fresh buyers coming in. I want to see them, absolutely dominating the book. So hopefully that's given you an example of what I deem momentum trading to be. And then I sort of have, I guess, two key setups within that. One is this morning drive play. So looking for the first sort of 45 minutes to an hour in that sort of backdrop with those points I've mentioned. So looking to, say, buy the open or buy the early range breakout, holding that trade for an hour until I start seeing certain checks that I think warrant exiting. And then the second component of this momentum trading is seeing that sort of afternoon breakout again from a tight range. So we saw it yesterday in Australia where, our market was holding. Resources were holding. They've already started moving up. And then about 2:00, they just took off on a very short term, say 5-minute time frame. And that's that sort of second momentum leg into the close. And so that money that flows in, from midday onwards, if it starts going, it's usually always going to end up on its high in the close. So
I actually wanted to point out a couple of highlights from working with you. And so I took a snippet from one of the daily report cards that you wrote to me. And I want to make that point to the people that are watching and listening. And so this comes from one of your daily report cards. It's notes on one of the A+ setups that you made. And I guess you find this A+ setup, and I'll just read your notes. A+ setup and second day play post earnings upgrade. Key was lifting and holding above 1400 previous day's highs. I entered perfectly after morning consolidation when this 1400 level finally lifted and added good size at 415/20. Continued to spike, and I had targets into 1450, then 1500, big picture, but no follow through. And sharp reversal back to below 1400. Let me read that again. But no follow through and sharp reversal back below 1400. I got stopped out as I dropped below VWAP and went back below 1400. Got my size to the right level initially, and there was no price action to confirm getting bigger. No clear reentry signals either. Lost $3.5 thousand. And so one of the notes that I remember sending to you was, in this particular setup, did you see the volume to confirm the breakout? So you have the breakout based on price,
Yeah.
but you didn't have that expansion of volume
Yep.
to confirm that breakout. Is that something that's important to you?
Yeah, I definitely think so. Having spent more time with you analyzing these setups, I mean, it was a level break, but I mean, I think I was quite a bit of that initial volume, and then you just see no real follow through in terms of volume. So definitely that's something that I've added onto my toolkit, and I guess what I'm doing slightly differently now is very much not trying to get up to my full size until I see that volume confirmed. So I'm inherently entering probably at a higher price or later, but seeing that follow through behind me to confirm that this is a momentum trade. Or as you sort of said, you could wait to see the volume come through and then just let it sort of slightly drift back, pull back, consolidate, and then try and get reset into that zone.
I find that interesting that you were the volume breaking the stock out.
Well, that's not quite true. What I'm saying is, if say 30,000, 40,000 shares traded, if I'm 10, 15 of that, then,
Yep.
I'm at least sort of 30% of the volume.
Gotcha. And that ties into a snippet that I took from another one of your report cards
Mm-hmm.
where the same theme comes up. So we're talking about a particular setup, and I'll read what you wrote. Sector
Mm-hmm.
breakout plays given strong earnings from HUB. The latter too thin early, but OVH testing key resistance at 79.80. I took 100,000 shares and immediately followed through with good order flow behind me. I did add 50,000 shares more on pullbacks to 81 cents, but couldn't have gotten bigger really, as couldn't manage risk given the book. Plus 3.4 thousand and 3.7 thousand in PPS. And so my question to you here was exactly what we were talking about before. And I think that this is something, so, you are a very successful trader. Your favorite trades are breakout trades, and you want to get better. And so one of the ways to get better is to really nail down the variables that you want to see for your breakout trades and really
Mm-hmm.
study them. And so my questions to you were, do you look at RVOL? My questions to you, do you look at ATR, average true range? My questions to you are, do you look at the volume in the breakout? My questions to you is, do you look for low volume into the pullback when deciding sizing? My question is, was there a news catalyst? And if there is a news catalyst, is that going to help you to get bigger?
Mm-hmm.
And I wrote, these go into deciding whether to buy that pullback and how much or breakout. And when review, you want to be considering these factors and others that are important to you. So I had a friendly challenge to you.
Yep.
Friendly challenge to be more detailed here.
Yep.
And so what if you were to think about, Austin, an A+ breakout trade for you, what would be the variables that would go into that for your markets? Don't give
Mm-hmm.
away the secret sauce.
No, no, no.
But what are the general variables that are important to you?
Yeah, well, I mean, that first point, I remember this, you mentioned RVOL. And if I'm trading the right stocks, inherently the RVOL is going to be a lot higher than it was the previous day. So that I don't think really helps. I mean, if the RVOL's not anywhere near what it was yesterday, then I'm definitely trading the wrong stocks. But on the whole, the RVOL should already be elevated and is often already above the previous day's volume. So that doesn't often help me too much, because if I've picked the right stock, then it's in play and the RVOL will be elevated. ATR is definitely something that from this conversation.
I don't want to skip over that point, because I actually think that is something that you are instinctively moving past, but a lot of people don't. I see that as an issue with a lot of people making breakout trades, which is that RVOL really is very important. So if you're not seeing RVOL that's elevated, that in of itself may tell you that you've chosen the wrong stock.
True.
You're doing such a good job of stock selection, but there's a lot of people listening that don't. So,
well, I mean, we have obviously software here that can quickly tell you where your vol at is versus yesterday just by a click of a button. So yeah, you definitely need to check those things.
Yep, and we have that on our level 2 box
Great.
on our
Okay.
software here. And so I got to tell you, if Arville's not elevated, and I'm thinking about making a breakout trade, I'm not as inclined to buy that breakout if Arville's not there. All right, so
Mhm.
Arville is important, but you're doing a good job of screening.
Yep.
So
The ATR concept is very, very important, and for very short term traders, probably they don't think about AT enough. But for me, it's a great base or a starting point for understanding my position sizing. So you asked me to be more detailed. So if I know the ATR of a stock, on an average day is say 10 cents, there's no way in hell I should be risking more than 10 cents. But really, if I'm managing my risk correctly on an intraday level, there should be no way I'm risking more than say 5 cents or 4 cents. So when you ask me more detailed, that's what I've gained a lot from these report cards. So I'm now looking at stocks and thinking, okay, well, if I take this level or if I see this and I buy that, what's the ATR on this thing? Where am I wrong? How many more shares can I buy? So that's really important, I think, point when it comes to trying to get bigger in place. I think often, in the heat of the moment, people are just, executing and just buying and just a set dollar value, but that doesn't make any sense to me. What makes sense is understanding, okay, where am I wrong? What's my risk on this trade and how big can I get as a consequence? Um, is that a fair point?
100%.
Now, in terms of volume in the breakout, in the past, what I've normally done is I'm normally joining once I see that volume. So I'm watching the book, I'm watching the price action, I'm watching the algos. And if I'm seeing fresh order flow and I'm seeing, say in a long example, I'm seeing this fresh order flow that is just absolutely dominating the book, I'm joining with that volume. So, I'm always looking for, say, big offers that get lifted, stale offers that aren't reacting to the catalyst, whatever it might be. So that is always hugely important just in terms of following the price action, following that volume. So that's definitely a major, major tick. So when I go back to my point of A plus is a catalyst, it's a setup, and it's the tape. The tape is that volume in the breakup. The tape is that volume in the trade. Now, your point, you said to me there was low volume in the pullback, is something I probably never consciously thought about, and now I'm thinking about it more.
So let's talk about that. So a
Yeah.
breakout trade, if we were to write a book, if one of us here was a writer, and they had
Who would
written a
that be?
book, and they had written a book or was going to write another book, they would say this for a breakout trade. So you'd say you want an elevated R-vol, you'd want an ATR that made it worthwhile for you to take on the risk. They'd say that you want to see increased volume in the breakout. So when you look at your candles, whatever time frame you're looking at, you should see a nice large green candle that is larger than you would see with others in terms of the volume. And then you want to see in the pullback, you want to see declining volume. So you want to see
Mm-hmm.
the volume really strong to the upside, and then you want to see the volume as it's pulling in to be lighter. That is a textbook signal of a variable that is confirming that the breakout can
Yeah.
continue further.
Yeah. I guess, once again, it's probably not something I consciously thought about. I'm mainly just watching the book. And if I take a level and there's no follow through and it pulls back straight away, then I pretty much know that my ad or my entry right there in that moment was wrong. If I'm right initially and and it does take off, I need to get better at now looking at that volume if it does drift back into my level. I haven't really, I guess, thought about it enough. It's
So
more
let me
like
give
if
you an
I'm going to
example.
be
So let's say we're looking for something to break above $30.
Yep.
And we got good RVOL, we got a news catalyst, it's got a good ATR, and we buy it, and it really pushes away from price on really good volume, which is
Mm-hmm.
another variable that we look for in the States. So we want to see increasing volume on the breakout, and we want to see it move away from price. We want to have it a bigger move than we normally would when something clears a level. And then let's say it went up to like 30, 50, and then on very little volume, it busted back to 30.
Mm-hmm.
that would be a trade decision for you to add size right there before you
Yep.
even saw any buying on the bid. And so when I say you want to be thinking about declining volume into the pull-in,
Hmm.
if you notice declining volume, you may want to start buying more and not wait for somebody else to sort of jump
Yep.
in
Yep.
at a price.
Yep. That's something that I'm not good at, and it's definitely something that I'm working towards.
You're talking about something where you want to buy price and volume
Hmm.
for you to add size to a breakout trade. What I'm saying is that there may just be price with
Yeah.
declining volume that sort of gets you. You might
Yeah.
not need that confirmation.
Yeah.
All right, good. And so let's talk about news catalysts. So important to you?
Very,
Are
very
you
important. So I sort of start my day with, as I was saying before, with trying to break it down into different categories. Is it fundamental earnings report, or is it just some resources company that's signed an MOU and it could be wishy-washy? Is there a big, say, macro event? So that catalyst, I sort of, is it a macro event? Is it a company news specific event? Is it, we get a lot of broker research, obviously, and because our market's smaller, these may or may not have bigger impact. So that's another type of catalyst. So that's how I am grading my catalyst. And I know the ones that work better for me. I know the ones that often have more impact than not. And I think that's the big thing that I didn't do enough of when I first started trading. And I realized how important it is to have this catalyst to get the stock moving, to get people interested, to get the volume so that you can manage size or you can get bigger.
So do you feel like it's not just the news in of itself, but it needs to be the news in of itself and a good broker, a good analyst covering that stock, saying good things about it?
No, no, I don't think that. I think what's important always is understanding, does this fit my edge? And inherently, I always want to buy the strongest stocks and short the weaker stocks. And if there's any catalyst wrapped around a strong stock, I'm going to pay attention to it. If it's a stock that is in the middle of nowhere and someone comes out and says something, or they've come out with some wishy-washy news, it's not good enough for me. And now that's me being selective. Sometimes that's a big mistake. But that's just what works for me. And in sort of my playbooking and in our back testing of different catalysts, it definitely is a factor following the trend, following strong stocks as opposed to just trading any catalyst.
So yesterday in your report card that you sent to me, you had an event where you got a research report right before the open and it kind of got you off track.
So are you talking about a phone call I had with a broker about
Yes.
a stock that, yep. So this was me at my worst. So I'm pleased that you can bring it up. But quite simply, it was a busy
Hey,
day with,
that's what I'm here for.
it was a busy day with 10, 15 stocks reporting. I
Traders
got
live in a world of we walk around quite often wondering how it's possible that one human being could be so stupid
yeah,
in one given moment.
that was definitely me. The day before yesterday. And so, look, I got a phone call 10 minutes before the open. It completely threw me off in terms of my prep. And he just used the words, "This is the worst report I've ever seen. This is horrendous." And I just kind of wanted to get him off the phone and I want to kind of get on my day. So I literally just gave him some to go and short on the open. I flicked the chart for a second. I didn't even read the announcement. And it just pains me to sort of to see myself like fall for these things, but we do. And sure enough, I shorted the open, thing dumped for a second, and then it absolutely took off. Biggest short squeeze of the earnings season, and covered literally 5 minutes later for a quick $4,000 loss. And that was my first trade of the day. And so once that happens, it sets you off, I think, in a bad vein. So that wasn't necessarily that was just a mistake. That was just someone giving me their opinion, and I listened to that opinion before I did put my own filter on it. That's what happened there.
Now, Austin, when you when that broker calls you up, are you telling him to enter the orders for you, and he's going ahead and shorting
In
it.
in that instance, I did, yes.
So a sales trader's calling you up saying, "Hey, I've got this idea," and you're
Yes.
saying, "Go ahead, go with it." And
Yeah, it was a mistake. I mean, I'd say that I don't often do that.
I'm just more curious about. There are people that are listening that are not familiar with how trades are executed that way. So
Yeah. So I obviously were lucky enough to have accounts with several brokers, and they provide varying degrees of color, often very helpful, and often in this regard just complete noise. And in order to pay the piper, as it were, of course, I want to pay brokerage to these guys. Normally, what I do is just give them a trade I want to do. Say, a completely different stock to their idea, maybe. But in this instance, I gave him that order to execute. He just obviously executes it in the market, and it filters straight back into my account.
and so, are you going to take that guy's phone call next time?
Of course, he's a good mate. He just, he
You got
just,
one wrong.
you know
Yeah.
what the market's like. The market, it's just, it might have been a bad report, but everyone's short, right? It's just, it's no one's fault but my own. And
My question, Austin, would be around, things like this are going to happen from time to time, right? You are human and you will make errors and you will start your days off on the wrong foot again.
Yep.
The thing that I'd like to ask you about that you could talk to the group about here is, how do you personally reset? How do you come back after facing some form of a negative, whether it's a trade made or a trade missed or a flat tire on the way to the office or whatever it is? How do you personally come back from those kind of things and reset and move forward in the right way?
Yeah, I mean, it's a great question, and I certainly haven't by any means perfected that. I mean, I think in the past, I am sorry, a very competitive and probably emotional person. And in the past, I probably, would go off on a little tilt. Now I've got a lot better at just cutting into position instantly. It could be the high tick. The most important thing is just to get flat, get out of the stock, because you're just making bad decisions. So that's step one is get flat. On this particular day, it was quite clear that the market was choppy. Nothing was really going to be trending. Not my ideal environment. So I think at like 11:30, I literally switched it off, went to the gym, and just completely reset. The other thing to say also is, what I did that day is I wrote to you guys and I said, this happened. This is how I'm going to get better. And yesterday I had a great day and I got back all of yesterday's losses. So that is the big thing. It happened, write it down, laugh at yourself. And then you've got to make the action plans or the steps to stop it from happening and to get better, obviously. And that's why I enjoy writing these report cards, because it's analyzing yourself and it's making clear action steps to then go out and address the next day.
So one of the things that guys do on our desk is they think of one trading session as more than one day. So let's say you start the day on the wrong foot and you have a bad trade and you have a bad open. They literally get up off their desk, and a lot of guys will go work out in the middle of the day and reset, and they will literally think of when they come back, sit down and trade into the close as a separate and distinct day.
Yep.
And they use that and they developed that technique so that the bad open doesn't spill into the rest of the day. It's a new day that we're starting.
Mm-hmm. Yep. That's a brilliant point. And I think we do definitely have two distinct sessions in our market. We talk about this a lot on, our community, on our chat room, about this first hour or first hour and a half of this price discovery, this, morning drives. And then that second session is often sort of the mean reversion or that consolidation that may or may not go on to a trend in the close.
So I want to talk about one of the things that you have worked on, and that's tagging your trades.
Yeah.
So you took steps over the last recent weeks to start to tag your trades and measure them. Why don't you tell us a little bit about what you're doing on that front?
Yeah. I think that the main reason why I'm doing this is to really try and gauge how much money I might be making or losing from holding positions, and how many days overnight that is, and how many days is my sweet spot. Now, we had a good market, a good trending market, a good momentum market 2-3 months back. And, I was making the bulk of my profits from overnight positions. But the market's always going to change. The regime's always going to change. And recently, obviously, we had a big sell-off, and I was caught holding, book alongs and took a big drawdown. So the whole point behind tagging these trades is to understand, for me specifically, how much money am I making from intraday trading? Am I actually performing swing trading? And the other main thing with this is to really try and understand your best trades, or what trades are making you money in this environment. Now, I'm still trying to get this working properly, because there's often a lot of overlap. But say, for instance, your best trades are news plays, and that news play might be just, say, company specific earnings. Then I will tag news play, and I will tag what the setup was. So it'd be morning drive. And trying to build up a database of these to really understand, what my strengths are, where I'm making money. And a guy in our office has done something quite nice as well, where he's built something in the background that just tells you whether or not that was with trend or without trend. Are you going with the uptrend, or are you going with the downtrend, or are you just trading, noise? And that's also very helpful. So that's the whole point behind tagging. It requires a lot of effort post the close to fit on the details, but I think it will be very worthwhile.
Okay, great. Yeah, and that's important. I think a lot of traders who are developing, coming up the curve, do not have a system in place where they're measuring what they do well and what they don't. I can tell you that the trader walks around here who I proclaim to him is going to be the next seven-figure trader. I remember when he came in and asked for more capital for a particular trade, and he had very, very strong evidence to ask for that additional capital, such that there really wasn't anything for me to say, but yeah, let's do it.
Yeah,
and
it's very much the same here. We've got a trader who's been here for 5-6 years, and I think he's an absolute superstar, and he has very specific edges that twice a month fire off. He makes a walk to the principal, and it's a no-brainer for the principal. And he gets increased size for that specific edge, because he can show that that's his unique edge.
All right, great. So another thing we've been working on is sizing. In your monthly review, you talked about getting bigger and trading a little bit larger in some of your setups. And we said, hey, let's see if we can develop some rules around that. And you came up with some rules. Why don't you tell us a little bit about what your rules are?
Yeah. I mean, as this sort of highlights, you try to get me to think about risk as our metrics. So, really thinking, okay, each trade I want to risk a set dollar value. In my A+ trades, you should be risking, 2-3 your baseline risk, because they're your A+ trades. And quite simply, what I'm trying to do then is break down my book of stocks into this 1R risk. And so we start from the top 10 units of risk across the whole portfolio. So that means if I take 10, just say B trades, I'm risking $5,000 per trade. If I set my benchmark as $50,000 risk on that day. And, these metrics are things that I sort of pulled from thin air, so it can be adjusted accordingly. So 10 units of risk across the whole portfolio, risk value across portfolio is $50,000. That's what I would feel comfortable losing on one day. If I hit all my stops and I was trading correctly, that's the number that I think I'm like, okay, I took some bad beats today. That's the capital I have. That's 2% risk on any given day. The market gaps down 2-3%. I've hit my stop. That's what happened the other day. So therefore, 1R is $5,000. And in those A+ trades intraday, that's the kind of number I feel like I should be risking, is about $15,000 on that trade. Normally what happens is I will buy a position, a starting position, and I will only get to that size once I see something happen on the book, on the tape, to then add and get up to that risk that I feel like taking. Have filters in place that don't exceed 10R. So what I've built is a end of day template, which shows me what my current exposure is overnight on an ATR basis. And it tells me whether or not I am breaching that 10R multiple. Now, what I've been doing recently is really bringing back the overnight book. So I haven't even got close to that 10R. I want to try and really get better at getting big intraday and then dropping it back overnight. Express winners and losers in terms of these are multiples. That's quite self-explanatory. And have a plan for increasing size of 10 units and risk levels. So, you were saying at the end of every month, if I'm hitting these numbers, I need a plan to get even bigger. I need a plan to scale that up. We're not there yet, but that's, it might be, say, a 10% bump. It might be a 15% bump, whatever it is. So yeah, that's the action plan. The hardest thing really is understanding the stocks where you can risk this much. There aren't as many sometimes as I'd like.
Okay, and I want to highlight something else that sort of came out pretty early in your review that I found pretty interesting. And one of the first things I noticed from an early report card was the use of the word energy. And you wrote focus and energy was very good. And it came up again.
Yeah.
Another report, good preparation once again, and I felt energized.
Yep.
And this is not something that's particularly important for somebody who is just starting out. So if you're just starting out and you think that having fun and being energized is how you're going to be a good trader before you develop edge, that's not true. I am making these comments to somebody who has edge and who is a 7-figure trader. But these are the types of things when you become a really successful trader that you really do work on. These are the types of things that really do start to get you to that next level, is tapping into what's fun for you, tapping into what keeps you energized. What trades provide you energy? What trades demotivate you or stress you out? That's information that you probably ought to move away from some of them. But I remember talking to you and saying, this is really coming up. You're doing better. There's a correlation between you being energized and you having a good time and you doing well. And I remember asking you, hey, what are you doing after the close in your life to make sure that you're energized? And you came up with a list for me. And so, people always sort of think the day ends for a trade. I want to be a trader. I can just go home in the States, 4:00. But a lot of times it's a lifestyle. And you're thinking about how to be focused and energized for the day. So what are some of the things that you find outside of work that go into you being focused and energized?
Yeah, I think one thing, I think you even read about this in your book. One thing definitely is just talking to other traders. So, I'm often just chatting with Bryce, say, after the close, and that gets you excited again for the next day, or you're inherently talking about how frustrating the market is or how excited the market is. So that's a big thing. Staying energized is by networking, talking to other guys in the market for sure. Secondly, I love sport. I love fitness. So that's a huge part of what I definitely try to do to stay energized, whether it's a run, swim, gym, whatever it might be. That is really, really hugely important to me, especially after a stressful day. It's just try and sort of, get it out of the system. And I also think that this report card, I mean, I've always done reviews, but, this sounds a bit cringy, but these report cards really do get you energized. I remember once I sent you this, and then you CC'd in Brett Steenbarger, who, I've read all these books, and he's a bit of a guru to me.
Oh, that guy.
And that guy. And you just CC'd him on an email to me. And that was just like, wow, I feel so excited now.
For those of you who don't know, Dr. Steenbarger is the very best trading coach in the world.
I mean, his content is just, it's incredible. So, but to get that email, it really got me excited. So that's the third point I'd say about getting energized is these reviews. They might seem like a hassle, but honestly, it gets you quite excited for the next day to go ahead and think about, okay, cool, what can I do better, or what am I doing right?
On that note, I get a lot of energy, and I really enjoy working with really great traders and reading what they're working on. So when I get your report, I look forward to getting your reports.
Even last week, Bella, when I'm crying my heart out, how much money I'm losing.
I want to see. It's people go through it. People go through it, and then the great traders pull themselves out of it, and I enjoy watching great people, great performers go about being really successful. So I actually get really energized and enjoy reading these reports. So I know I think you gotta get ready for the open here.
Yeah, we're open in an hour, so about 10 minutes.
So I do want to point out for those who are listening that Austin can be found on Twitter right here, and this was your latest report card, and you've been posting.
Not quite true. That was the one before yesterday.
Okay.
There's one Correction. I fired up last night. Correction, but mate, doesn't matter.
So yesterday was much better.
Yesterday was much better.
But you've been posting these online. You've been posting your report cards.
And look, I mean, at first it's a bit cringy, but the main thing is you've always said is one, be accountable. Two, sort of, by writing this, I think installs like really good practices. So that's the main thing. It's just put it out there. Hopefully it installs good practices. And then thirdly, I've had some nice comments, and I'm meeting people who I never would have met before. I met my best mate from a trading chat room. Why not keep trying to engage people in a genuine level? And the P&L stuff I think it's irrelevant. So perhaps I should just delete that. As you said, it's more about, what are you working on, and how can you get better?
Yeah. I was in Chicago and reached out and said, hey, if anyone wants to chat up and talk about trading. And there were 3 people who I'd never met before who reached out and said, will you meet and can we talk? And I think they thought I wasn't serious. And I said, sure. And we met and talked for 30 minutes. And they were some of the more enjoyable moments of my trip, just talking to people. One person was a pilot. Another person was at an investment company. Another person was a futures trader. There's a lot of interesting people out there.
Yeah, absolutely.
Doing interesting things that you learn from. That's important to your educational process. Putting yourself out there and sharing is important to your own educational process.